7 ways to finance a rental property using the power of other people's money. This is really an age-old question in the real estate industry, with many different people having many different opinions. One first concept is investors who have the ability to pay cash should really consider borrowing money for their investments, as they will get more value for their money. What is leverage? Archimedes very famously stated, "Give me a lever long enough and I can move the world." That's the same basic concept behind financial leverage. Leveraging is when a buyer uses financial tools or borrowed money to try to increase their potential return on investment. The power of leverage. This is how it works. You put $40,000 on $20,000 rental homes, and the rest of that is financed from the bank. Assuming that each house appreciates 5% every year and that the monthly expenses are fixed, each house will clear roughly $150 in net income every month. How to finance investment property using other people's money. OPM Option 1, hard money loans. So-called hard money lenders are willing to lend based on the expected future value or income of the property. OPM Option 2, business partners and investors. A lot of individuals would put money into real estate but don't either have the time or the experience required to do so. Those people who give money for this venture don't take part in the everyday activities and get money back for their contribution. OPM Option 3, crowdfunding. Crowdfunding opens up the opportunity for real estate investing to a wider pool of people by making it possible to solicit small investments from a large number of people instead of relying on few wealthy investors. OPM Option 4, credit card financing. Very famously, Robert Kiyosaki, also known as Rich Dad, financed the down payment on his very first investment property with a credit card. However, let me emphasize that this particular strategy definitely is not recommended. I consider it far too risky to go this route, but it's certainly one option. OPM Option 5, Refi and Cash Out. Over time, either your own house or rental properties accumulate equity with them. Tapping into this equity is commonly referred to as a refi cash out. OPM Option 6, HELOCs. Rather than borrowing a lump sum at once, with the HELOC you can withdraw as much money as you need when you need it. OPM Option 7, house hacking. With house hacking, you can use part of your primary residence as an income-producing property. You could turn this extra bedroom into storage space, a guest room, or rent it out to earn some extra income. An investment financing property checklist. If you think about applying for an investment loan, it can help to gather as many of the necessary documents ahead of time. Your lender may ask for other type of documentation not on this list, but here's what you can generally expect. Copy of your driver's license. Bank statements for the last 2 months. Your 2 most recent statements, either last 2 months or last 2 quarters, of all other assets and reserves, such as investments and retirements accounts. A credit report. W-2 forms for the last 2 years and pay stubs for the last 30 days. Federal and state tax returns for the last year. Mortgage statements, homeowners insurance declarations for your primary residence and any other rental properties.